Gold bouncing back after a drop in the prior session. I'm here with ETF Securities, Mike McGlone. So, Mike, gold dropped nearly 1% on Tuesday on that encouraging housing data. And today we do have the positive data out of China. Is that what you're attributing to the bounce back today to?
I think so. Gold's just basically knocking around between good support at 1,200. Basically, the low for the year was right around 1,200. It was a key support back from 2010. And good resistance is around 1,100. So it's being kind of knocked around at the moment.
Right. Well, technical analysts are saying that, as long as it remains below 1,300, that further declines are in store. We had the UBS research note out yesterday, lowering their 1-month and 3-month price targets for gold. What do you think the short-term landscape looks like?
Well, first of all, I love when technical analysts say that, oh, if it goes down, it's going to go down. If it goes up, it's going to go up. So I have to put that plug in there, being a former technical analyst myself. But I think the overall picture for gold is it's a bifurcated market. It's back to some levels. We measured the all-in cost of production of gold at $1,200. So it's very close to that right now. So in the longer term, it's becoming very attractive as far as for currency debasement, inflation risk and things like that. Inflation is not happening. But in the longer term, we think it's at a very attractive level. It could go lower. It potentially is already put in the bottom, but we think it's potentially carving out a bottom now. But the key thing gold needs to have happen is this year to end. It's been a bad year.
Right.
Investors have been selling, and sometimes you have to just kind of end it and start over, and that's what's happening. And of course, we've had that major demand pull of the world's most notable asset measure, S&P 500, up 26% in the year. Sure, if that continues, gold's going to have a problem, but we know historically that's not the case.
So really, for the long term, you think now could be actually a time of opportunity for gold?
Oh, sure, absolutely. Longer term, gold is, we view right now, is basically at its all-in cost of production right around 1,200. It's very close, and that cost of production isn't going down. So, and then also, what's investors going to look forward into the future? Is the S&P 500 going to go up, annualize at 25% since it has basically since 2009? Probably not. We still have deficit and debt issues. 100% of GDP is our debt in this country. Our economy is growing. Yes, it's growing, but if you look at what's really happened, we had a deficit the most recent year of $680 billion or so, but the economy is only growing around 2%. That means it's only growing about $300 billion. So we're growing at half the level of the deficit. So I think people are seeing that. Yes, it looks good going forward, but it's certainly if we have a stumble in the equity market, and certainly from diversification and portfolio benefits, augmentation portfolio, gold's at very attractive levels.
All right, there you go. That's Mike McGlone of ETF Securities. I'm Brittany Umar for The Street.